All right, so I just want to review the 9 EMA exponential moving average and the 20 EMA. This is what I use for technical analysis to indicate whether a trend is bullish or bearish, and I use this EMA to guide my trading. So basically, the exponential moving average is a type of moving average that gives more weight to recent price data. And in this video, I'm going to show you just two examples of the 9 and the 20 EMA. You like to use these on a daily chart, preferably on a 1 minute, 5 minute, or a 15-minute or hourly chart. That'll give you short-term indicating reacting quickly to the price movements. That's what your 9 EMAs for. Your 20 EMA lags behind the 9 EMA, so you will see that below or above, depending whether it's a long or a short position. But how they work in trading is they give you an idea of bullish market or a bearish market. Now let's just get into it and take a quick look. So here I'm going to show you on this chart, the red line is the 9 EMA and the orange is the 20 EMA. As you see with the tabs up here, I'm using Fidelity Active Trader Pro. And all you would have to do is just click under here, modify it, and you can add the period, which is 9, which would be 9 EMA. If you need to know how to add the EMA, just go under Indicators and then type in EMA and Exponential Moving Average, and then just go through those settings. So let's just show you how momentum works. What I want you to do is quickly focus just on here and focus on the 9 EMA, which is the red line. I'm going to click on this and make this a little thicker just so it's easier for you guys to see. So you just click up here, click modify, and then what you'll do is just make this thick and apply. So now it's a little bit easier to see this. When you have bullish momentum, what you'll notice, and what I like to use to scalp or do a short-term swing trade, is what you will do is you will see that as it passes the 9 EMA and pulls away, it will respect this 9 EMA. There are multiple touches that have happened where you can see that it is holding this line. So right here, it is respecting the 9 EMA. And I'm going to keep drawing out these rectangles just so you can have a spot on it where, look at this spot right here, it respected the 9 EMA as well. And then as you go up a little bit further, you will see with the bullish momentum, it is respecting the 9 EMA. When you have bullish momentum, if you're going to continue buying these highs, you want to make sure that it is holding the 9 EMA, because there will be a point where buying pressure cools and it'll eventually break the 9 EMA and go down to the orange line, which is the 21 EMA, which happened right around here. So when I'm trading momentum, I am using the 9 and the 20 EMA or 21 EMA. And you will see all in this area, it is respecting the 9 EMA. So you had a touch here, a touch there, a touch here, and a touch there. Now it starts to consolidate, but it is holding both the 9 and the 21. A key difference that I want to notice, just so you can see, let me zoom in on here, is when you have momentum, your 9 EMA is going to always be above the 21 EMA, which is indicated by the orange line. So if you see here, your red line, the 9 EMA, is respecting, and it's always going to be a little bit higher because it's lagging. It's doing the previous 9 candles versus the 21 EMA is doing the previous 21. So as you can see here, the 21 EMA isn't used yet until it consolidates and it catches up to it. But then if you look over here, you start to pull away again. And look at this example right here. It starts to pull away from $32 up to $35. And it is respecting again on the 9 EMA. So when you were trying to figure out, how do I trade momentum? This is the one I like. I like to use the EMAs, the exponential moving average, because it is very common that they will respect these trends, and then you can get out of the trade if it breaks the trend. See, I started breaking the 9 EMA, retesting the 21 EMA right here in orange, and then it sold under a little bit. And then this is where you would get out of your position or you would hold, because at least it is still respecting the EMA and it is guiding it right there and it's still trading above. But if it fails here, then you would know. But right there, you could see it started to break away again. So that's one way to trade using the exponential moving average. Using the 9 EMA right here on Webull, we change the settings to the 9 EMA, as you can see right here. Now, what I want you to focus on is you see this purple line, that is the 9 EMA, and it's an indicator of strength. Or if you start having selling off pressure, you will see that it'll act as resistance. So it can either be resistance when you have selling pressure, or it can be support as you are going long. So let me show you. Celsius stock had a big catalyst and it started getting very bullish. I'm going to zoom in a lot so you can see, but I want you to focus on this side of the chart. Look at the purple EMA. As you had this massive sell-off from 26 all the way down to 23, the 9 EMA was acting as resistance right in this zone. Now let me just show you. I'm going to mark it just with a couple areas with rectangles just so you can see. So look at the purple zone right here acting as resistance. And then once you had this 9 EMA get broken, as it's starting to get retested right here, and once it showed to stay above, the action reversed and went bullish. So here, now that you have your first candle to break through the 9 EMA, you can start to see that it starts to respect this level. See how you have very thin wicks from 27.47 to 24? It is starting to respect this line, and boom, now you have this massive green candle that pulls away from the green. So now you're starting to think, okay, this is starting to show momentum here. Now watch, this is a 1 minute candle. Each candle is pulling away from the 9 EMA, indicating a bullish momentum, bullish trend. So I like to use these EMAs as trend plays. And as you see, as it stays bullish, if you're going to scalp this, you can use your 9 EMA as your stop loss until it's getting close. It retests it right here, and then if it's going to break it, you'd pull out. And then right there, it's still holding, as you can see, showing continued momentum if you're trying to get the trend. So now what I want to show you is when you zoom out, you can really see the bigger picture on this. You can see that the bullish momentum lasted all the way. Once it broke this 9 EMA at $25, if you were just trading it and watching it, you would see that it held for almost 5 points. So if you're trying to find the trend, it's good to use the EMA to guide bullish momentum. Now we're going to use the same indicator except the 9 EMA. We're going to use the 21 EMA, which is indicated by this red line. Ignore the yellow. I'll just get rid of that for you. That's the VWAP. But here you have the 21 EMA, which is it's a lagging indicator behind the 9 EMA. So if you see bullish momentum, your 9 EMA will be the one that will be much higher than this. And as it starts to sell off here, you see the same thing. It's lagging it. And you can use the 21 EMA as a sign of support. So right at here, you saw it at 24.8, whereas at the 9 EMA, we saw it much lower at $24. Now it is showing that bullish momentum. You can use this as your stop loss if you were trying to buy and sell this rapidly and just buying candles as it's going through. And you can see as it pulls away, it lags a little bit at the 21 EMA, but you have big wiggle room here. It's going to retest this level soon. And as you pull back, you'll see it starts to get respected. So just keep going. And then right there, it's starting to consolidate right here. It's playing this thin line here. And it's pushing off from $32.35 up to about $33. And once this 21 EMA breaks, that would be the break of the trend of the bullish momentum. And then you'll see it starts to reject it and come down. And then once it breaks through again, that would indicate the bullish momentum. You could trade as long as it's going above this, you can go long on this position. So that's how I try to trade the 9 and the 21 EMA looking at this consolidation. I just want you to see this. You can see this zone right here of where bullish momentum is maintaining all from this $26 up to this $32. Once it starts consolidating, then you have to start looking at different technical chart patterns. But then you see the same thing again right in this area where you will see a common theme that it is holding above the 21 and the 9 EMA.